Right, we are going live. Right, well, all the buttons have been pressed in all the right order for a change. We've got the chat open for a change. Remember to make sure it's live. And we're here, so let's get rocking and rolling. So welcome to my swing trading open house. If you are looking for information and methodologies and strategies on how to profit from daily, weekly, or monthly swings in the markets, any market for that matter. And the more I'm researching, the more I'm finding out that we've got the keys to the kingdom. I'll show you as always, in just a moment and demonstrate it to you, but pretty much pick your markets. And we can validate if we should be trading it. We can also pick a time frame and decide if we should be trading it. And so again, the longer I'm doing this, the better and easier it's getting for everyone. So it's exciting times for sure. So again, the format this week's going to be a little bit different. Hopefully it's going to be a little bit more faster paced, less slides, which is the good news. I've been meaning to do it for a while, but finally got prompted to do it. But my whole philosophy around trading is that it should be simple. And ultimately, it should work. I was chatting to a trader yesterday who was struggling, and he had no strategy. He was just basically buying what he thought was support and selling what he thought was resistance. Price was making new 52-week highs, therefore I ought to sell it. That's not a strategy. That's a page 42 in the Technical Analysis Handbook that was written 60 years ago. And it's not a strategy, unfortunately, but we can show you what a simple strategy looks like. Yeah, exactly, Randy. You train your opinion. But I think the point that I'd skirted past was he hadn't tested it. He hadn't validated it. I'm not saying it doesn't. I know people who do that. I know people who do it profitably. Counter trend trading is how I might phrase it slightly differently. It does work, but there's caveats to everything, and you need to back test it, research it, and validate it. So that's what we've done with our systems, which is the great news. And the bottom line is it's simple. My goal, as always, is to give you the right tools, rules, and software to assist you. Community, welcome to everyone to support you. And if you'll allow me to be, I will be the mentor to show you the right way. I pretty much pressed every wrong button in the wrong order, the wrong way at the wrong time, so that you don't have to. I learned the hard way. It was by no means the easy way, but it did mean that you get to reap the benefits of sometimes my stupidity, self-inflicted stupidity, but nonetheless, it seems to have worked out along the way. One of the big mistakes that I've seen is that about interpretation, BTFD, we've all heard this, it's on the social media, quite popular at the moment, but buy the dip. And most people don't know what it actually means. We need to add a qualifying, we just need to add the trend, buy the dip in the context of the trend. You do that, add an extra layer of definition on what you're doing and keep doing it until you've got a rule-based system. Because what I don't want to do is what that gentleman yesterday I spoke to was doing, which is pretty much sitting there flicking through chart after chart after chart like a mindless zombie, hoping to find the next great opportunity and ultimately continually asking himself, where's the trade? Where's the trade? If you're asking yourself, where's the trade? And I did this for many, many years. I remember back in my mid-90s, my first real job, as it were, in Blockbuster Video, I remember asking myself, reading another 1,000-page tome of a book. Again, I've regaled the stories a few times. It was the Technical Analysis, what was it, Jack Schwager on futures it was. I had to turn around and look at the book. It's a 1,000-page monstrosity of a book. And at no point in there does it say how to trade. How do you find the trading setup? And it tells you what to trade, but it doesn't tell you how to trade. And there's a huge difference between theory and practical. So what I want to do, and what I think I was not, well, I was 19 at the time. And when I stopped asking where's the trade and started down the journey of there's the trade, you fast forward a very long and arduous journey. We get to where we are today, which is rule-based trading. And I should be able to, and you should be able to just very simply log on, check your preferred stocks, charts, markets, timeframes, whatever it is you're looking at, and go, there's the trade. Because that gives me peace of mind. At no point am I wondering what to do, when to do it, and why I'm doing it. I just want to be able to go, this is exactly what I should be doing at this moment. And if there's nothing for me to do, then I'm going to walk away. And as I mentioned earlier, I refer to what I do as production line trading. So we've actually got a family of strategies for the markets. So the main one, the one that we normally talk about each and every week, is to capture the main move of the month. And the classic trend trading, the buy, the dip, the sell, the rallies. We can do it on a short-term basis as well to capture the main move of the week. We can also capture the latest edition, and the latest edition that's been algorithmically validated, completely rule-based decision making. But the funny thing is this was actually the first strategy I ever traded, was to capture the main move of the day. And for 12 years, I traded this strategy. And it's only recently that I've been able to take my discretion out, take my opinion out, and say, should we actually be doing this? Is it something that I bring to the table just because I see the chart in a different way? Or is it actually a rule-based system? Well, guess what? We've got the answer. It is a rule-based system to capture the main move of the day. We can also do it to day trade. If you want to day trade, we can do. Again, as always, there's some caveats to doing this. There's a little few tweaks under the hood, but nonetheless, the same principles can be used to capture the main move of the morning. So we capture daily, weekly, and monthly swings. You want to range trade, we've got you covered as well. Part of the process, this is a little bit more discretionary. I've not quite got it to an algorithm, but nonetheless, the decision-making process is still rule-based. I've just not quite converted it to computer speak for the moment. But we've got systems and processes that are all back-tested by a shitload of data. It's the boring stuff, but unfortunately, that's the good stuff. That's the stuff that makes us money. So in case you're wondering, again, appreciate that there's a few new names. Hello, Jim, Johns, Lucia. Hello, Perry, Randy. Hello, Ray, Rodrigo, the old hands, Vito, Adrian, someone called BB, and not Brett, because you've got a BB in your surname as well. I'm Chris. Colin, not seen you for a while. Hopefully you're doing all right. Still waiting to take you up on that burger, my friend. So if you're ready for that pint and a burger, we'll do that. Anyway, in case you're wondering who I am with the weird accent, my name is Phil Newton. Like Cape Coffee walks, I like spending as much time as possible away from the charts. I don't want to sit here all day, every day. I try and practice what I preach. I want to do other things beyond sit here. It's my choice to be here talking to you every day, just like it's your choice to be here spending some time with me. And for that, I am very appreciative of it. What I am not is a guru. While I have been trading for almost 28 years and, since the early noughties full time, I am not a Wall Street guru. You should most definitely not listen to me. I am not a financial advisor in any way, shape or form. We're all responsible adults. It's your money, not mine. So you get what I'm saying here, but let's be responsible adults and, don't defer any responsibility just because I'm here. I'm just further along my journey compared to where you are. And I've just figured a few things out. The legal stuff, because I do put myself out there, is past performance is no guarantee of future performance. What I can show you, though, and demonstrate that it does sing from the same song sheets. And that has what has produced a long multi-decade career. I'm just a regular guy, as I mentioned. I found some success. I found my success very early on. And I do this because I enjoy it. I am the type of guy that likes to stop tourists to see if they need directions. I get asked why I do this. Why not? I enjoy doing it. I've got to admit, I like trying to give back on these sessions as much as possible. I had no one to ask when I started out. Because of that, I did make every mistake that you could make. And some of those mistakes I've made more than once. I'm not shy about telling you. You learn more from my mistakes so that you don't have to. So there we go. That's another way of thinking about it. Did I mention I've got a thing for flamingos? I don't know why. We've all got a weird thing. This is my quirk. But I just like going around the country and finding flamingos and visiting zoos, animals, spending time outdoors. Anyway, enough of the weird shit. I get results. I get people results more than anything. I get my own results. My students get results. They tell me that they get results. So it's not just me saying that they do. Here's all the screenshots. I've got thousands of these things. It does warm the cockles of my heart to see people get great results on a regular basis. And this is just some of the recent trades from the last couple of of weeks. As mentioned, if you do want to work more formally with me, you can do it. This is as hard a pitch as I'm ever going to give. It's your choice to do so. I'm not going to twist your arm. If you want it, it's here. And if you don't, that's cool as well. But whenever you're ready, just know that there is help and support for anyone who's serious about making it work for themselves. The agenda is we're going to spend about 60 minutes today. The intro's just been done. Well done. Congratulations. Slap yourself on the back. We're going to look at the markets. We're going to look at my production line trading. We're going to demonstrate that to you right now. And the bit that's different, by request, my popular request, the phone lines are going to be opened later. So if you'd like to hop on and have a chat, if you've got a view, if you want to have a look at the charts, if you've got a view on the news, if you've got a question, if you've got some feedback that you want to share, just know that you can just hop on, we'll have a chat and we'll talk about the markets together. So with that said, let's go and nerd on the charts. Now, while I'm just getting that ready, get my little drawing widgets, which I've not got, there it is, just pop it over there. If you've got a stock that you would like to for me to review, pop it in the chat box. I've got it on my other monitor. Let me just check the YouTube. So if you've got a comment, I've got the YouTube chat open as well. So if you're watching on YouTube, I can see there's 1 or 2 people that are live there. Hello on the YouTubes. And for anyone who's on the Zoom, just pop it in the chat box and we will get to it. So a quick reminder on the strategy. At its most basic, I'm trading the trend. That's all I'm trying to do. And what I'm ultimately doing is defining, or I've defined what I believe to be the most mechanical interpretation of, firstly, the trend, and secondly, how to buy the dip in the trend. Because I mentioned earlier, I want to buy the dip, BTD or BTFD, if you want to put the expletive in, buy the dip. That's what I want to do. And most people will mistakenly say, you know, we've got a downward movement. And whenever there's a downward movement, and you hear them all the time, the social media just like makes it very loud almost. Buy the dip. Oh, it's dipping, let's buy. Just because there is a downward movement doesn't make it a dip worth buying. And just adding some qualifiers like, yeah, the market or the stock or the chart or the whatever it is that you're looking at, it is moving down, fact. But is it a dip worth buying? Is it a dip in the context of a trend, an uptrend specifically? So to be able to buy the dip, you need to know what the trend is. So all I'm going to do is define it. So that's what these lines help me do. So this one here is the 200 period moving average. This one here is the 50 period moving average. And when the 50 is above the 200, I'm going to say that we're in a bullish stance. I'm only going to be looking for bullish opportunities and profiting from upward movements in the market. There's also a third line on the chart, which is 20 period moving average. And essentially when they're stacked on top of each other, guess what we're going to be doing? We're going to be going long. So that's my directional bias. And over here, we can see that we've got the 200, we've got the 50, and we've got the 20. And when they're stacked below each other, we're going to be bearish. And we're going to profit from downward movements in the market. So we're going to do the opposite. We're going to sell the rally in a downtrend. Now, I'm pretty much stating the obvious for a lot of people. And some of you may be rolling your eyes, and fine, you can roll your eyes at me all you want. But it works. Don't underestimate the power of simplicity. I was introduced to this concept in the early 90s, and I dismissed it for a few years because it was too bloody simple. But this, fast forward a couple of years after that, in the late 90s, I realized how stupid I'd been. I'd stunted my potential opportunities very, very quickly because I thought that trading had to be complex, and it doesn't have to be complex. We've all looked for the Dow theories, the GAN theories, the Elliott wave theories, the fractal patterns, the mathematical equations, the Fibonacci, the blah, blah, blah. Insert your own bullshit narrative that you've tried to convince yourself. But simplicity works every time, not just in trading, just in every facet of life. If it's simple, it's easy to do, and it just, for some reason, just works. So we've got our trend. We've got our trend. So now we're going to say that every upward movement is the bit that we want to profit from. And the downward movements are going to be buying opportunities. But let's quantify that further. So we're looking for a dip in our trend, a retracement that we can look to buy the dip in the trend. So we know what the trend is. Now we're looking to quantify and qualify what a dip is. Now, just for simplicity, I'm going to focus on the 200 and the 50 period moving average. So there's the 200 and there's the 50. But very simply, we can say, well, when price gets back to the 50 period moving average, that now is a buyable dip. It's not an automatic buy. Don't mistake, listen to the wording. It's not an automatic buy, but it is statements, a buyable dip. There's no ambiguity with that. When it has happened, that has happened. Now you know the secrets. I can agree with it. You can agree with it. Adrian can, Brett can, Carlos can, Chris, Colin, Demlu. I go through everyone's names. We can all agree that when you know these rules, we can all look for exactly the same thing. And it doesn't matter whether it's day one, week one, month one, decade one of your trading journey. We can all agree that that has, fact, happened. Price has touched the 50 period moving average. Let me pause there for dramatic effect. Does everyone get this? Just pop a little, yeah, I feel I get this. Stop going on about it. Just pop it in the chat box. I want to make sure that you get it. Buy the dip. We've just quantified the dip. If it doesn't touch the 50, it's not a dip worth buying. Get it. Awesome, Zeke. Thank you very much. A dip worth buying. The hard part is waiting for the dip. Cheers, Glenn. We've got the trend. When the 50 is above the 200, we're going to call that a bullish trend. Wait for price to push away, dip, away, dip. Away's the profits, dip is the buy. Away's your profits, the dip is the buy. Away's the profits, dip is the buy. Away, profits, dip is the buy. Profits. Oh, this one didn't. This one didn't work out. I'll show you that in a moment. Away's your profit, the dip is the buy opportunity. You're not going to get the last, you're not going to get the first couple, you're not going to get the last couple. You can get the bit in the middle, you're going to make a shit ton of money. Right, so now you know the rules. So when price comes back to the 50 period moving average, we can add the 20 again, just for simplistic explanation. I'm just going to say the 50. But when price gets back there, buy the dip. Buy the dip in the context of a trend. So now you know the rules. So when price pushes away, we're going to profit. Away's the profits, away's the profits, away's the profits. And then the dips are the Bible. So it comes back to the 50. When it goes, pushes away, you can choose your entry opportunity at that point. Again, I appreciate you giving you the back of the envelope version of this. There's a few extra rules that get you an exact entry point. But again, just for simplicity and speed on our open sessions, that's what we're doing. So what I'm showing you now is like proof, the proof that it works. I can quite literally, at the click of a button, say that when price dips between and then pushes away, that is my buyable dip in the context of a trend. If I did this over the last 20 years and nothing else, and didn't think about it and just put the trade on when the trade set up with the frequency that it's set up, when it was supposed to set up, I didn't look at the news, and I didn't look at the Fed, and I didn't look at non-farm payrolls, and I didn't think, oh, it's inflation, it's stagflation, it's transit, none of that bullshit. The trade has set up and it goes, so if I did nothing, it's like a little bit of like, here's what we could have won. If I did that, this is what the equity curve looks like. So $1,000 in is what it's done. So it's non-compounded, $1,000 in on every trade. You've got a lovely, steady equity curve. Again, just appreciate that this is non-compounded. Imagine what it would look like if it was compounded. That's the good news. There's the proof that it works. So you buy the dip, and the opposite would be to sell the rally. So just the opposites for the bear trades. Average prices crossed over. There's the 200. There's the 50. So away is the profits. Rally. There's the sellable rally. Profit from a downward movement in the markets. Rallies back to. It's now above. It's gone back below again. So we're looking for a downward movement in the markets as per the algorithm. So we're looking to sell the rally. Now, I don't know any more than the next person if the next trade will or won't work. I just know that on average, it does. And that's all that matters. Just like any other business. if you had a shoe shop on the high streets, if you got a shoe shop on the high streets and, you want to have a successful business, you've got to open up 9 to 5, you've got to have a certain amount of stock, you've got to have a certain amount of shoe size, you've got to have staff, all the usual stuff. All we're doing is the stock market equivalents of opening 9 to 5, keeping our having staff to operate the tills, having stock to sell on the shelves. So I don't know if the next trade will work. So I can't cherry pick the next trade and decide from a discretionary point of view to take or not take the next trade. I don't know which one's going to work. No one knows what's going to happen tomorrow. But what we know is that on average, it does work. And that's what I mean by when I compare it to a real world of business. I don't know if the next customer is going to buy anything. Are they browsing? Are they going to take one of everything in every size and every color? Or are they coming in for a refund? Maybe they've bought something and it's broke. Are they going to, is there going to be a customer complaint? We know these things to be true in the real world of business. And all we're trying to do is, well, the business of trading. And it's no difference. We're just putting the context a little bit differently. So now we're going to trade every setup that occurs on, in this case, the S&P. Now, the way that I like to trade, as most of you know who have seen me for any length of time, is I like to trade a portfolio. Let me just put, okay, the chart is intentionally blank. So I start all my traders off with at least the top 25 stocks. So top 25. So huge differentiator to make any strategy work is consistency. So if you're trading one chart, the S&P or a currency or an ETF or crypto, look, GAG, it does work on crypto, but we want to have more opportunities. And I typically start my students off on top 25 stocks or their top 25 stocks for their situation. But we know it works on the S&P. We know it works on one chart, but we're not going to get rich trading one at a time. So that's a little bit crass to say to me. We're not going to see exponential growth in our accounts. That's probably a fancy way of saying it. We're not going to see the steady equity curve trading one at a time. It's the slow road to success, as with all things, but we can get there a little bit faster. So what I like to do is trade a portfolio. And this helps me to not worry most of the time. It's not perfect. Nothing's perfect for that matter. But for the most part, most of the time, 99% of the time, I'm going to have a number of bullish trades and a number of bearish trades. So what you're seeing here, so I've got them separated. So this, we've got a trend column here. You've got blue, bull on this column on the left. And then we've got the bulk of them are all bear. So what this is that's just saying is that the 50 is, the 50 is above the 200, and we've got a bullish cross there. And the 50 is below the 200 on this group of stocks. So we've got a bear trend. So bear and bull. So at a glance, I can see which of the stocks in my top 25 are bullish and which of the stocks in my top 25 are bearish. And it's going to be some of those that have no trade opportunity, that they're between the moving averages. And that's what these different colors are. So when we've got red across the board, everything is below all the moving averages. So we've got the profitable downward movements in the average prices. And similarly on, if we see blue, like SQM there, and we've got blue, all the blue. So prices above all the moving averages. That's the profitable trending move that I was describing to you earlier. So we're going to have some of those trades that are bullish and some of those trades that are bearish. Some of them are going to be profiting to the upside. Some of them are going to be profiting to the downside. Some of them are going to be between the averages. And that's when you've got that kind of traffic lights mixed, red, blue symbol. But we've got a number of bullish positions and a number of bearish positions. And when you've got 2 or 3 bullish trades on and 2 or 3 bearish trades on, then when the market swings up, the bullish trades are going to bull and you'll make money on the bullish side. And when the market swings down, the bearish side of the ledger is going to profit on the downside. You'll lose money on the bulls. Well, hopefully they'll stay, and hold their head above water, as it were. But the bearish stocks will bear and the bullish stocks will bull. That's the theory. Again, it's not perfect. As I mentioned last week, it didn't quite work out the way that I would hoped that I've just described to you. But again, most of the time, this is how it works out. The bullish trades bull on the upswings. The bearish stocks bear on the downswings. Great. That means that I don't have to worry about what's going on in the world. I don't have to worry about the wars, the famines, the inflation, the stagflation, the transitory nonsense, who's talking shite about someone else. It's just when the market swings one way or the other, we should make some money somewhere. And if the market was to crash tomorrow, which is everyone's concern, it only happens once every 10 years. I don't know why it's such a big concern. On average, once every 10 years. There's some deep correction, 10 to 15% once a year, usually around March, usually around September. There's a season for these things if you look through historically and cyclically. But we should see some downward movements. And if there is a market crash, some of those bearish trades will have us well positioned. And sometimes you start hoping for a crash because you've got your boots filled with bearish trades, which is the situation I find myself in. And I'm thinking to myself, you know what? I'd really appreciate a crash right now. It would really be beneficial to my situation. And, but ultimately it doesn't really matter. The market cycles, it goes up, it goes down. And because you've got some bullish and some bearish, there should be profits along the way. And that's the logic. So coming back to the original concept, it's consistency. I've got to take the setups with the consistency and the frequency that they set up so that I can emulate the historical performance that I showed you. So all those charts have good historical performance. All of these stocks behave in a way that is favorable for the style of trading that I want to use. And this is what we're looking at now. I'm just showing you the equity curve for the last 20 years on each of the stocks that are in my top 25. And we've got hundreds of these stocks in the universe of stocks that we could trade. These are what I consider to be the best. They're the most liquid. They've got activity. I know I'm going to trade with options instead of stock, which is another way of making this work. It's not as capital intensive. And if you want to trade with debit spreads, you can do debit spreads. If you want to do singles, if you want to trade with stock, if you've got a larger account, and you can certainly do this. If you want to turn the dial and have a more investment approach and do it on a weekly chart with stock and have a 20-year time horizon, you can certainly do that. If you want to turn the dial the other way and speed things up, well, guess what? You can go to the weekly charts and profit from the downward movements and the upward movements on lower timeframes. But guess what we can do? We can say, well, in this case, I'm going to look back on the 60-minute charts over the last 10 to 12 years for no particular reason other than I've got the data to look back over the last 10 to 20 years. We've got a nice steady equity curve on the 60-minute chart. Well, guess what I'm going to do? I'm going to trade this particular stock on the 60-minute chart and profit slightly faster. Theoretically, I should be getting paid every week on this type of on this time frame with the same strategy. Interesting, huh? Interesting. So we've got a good strategy. It works. We've got a portfolio of stocks to make it work so that we can profit. And as I just mentioned, I'd said that I used, instead of stock, I use options as an alternative because it's not as capital intensive. That means that even for small accounts, you've got the ability to trade a portfolio. How do the banks and institutions make their money? They trade portfolios. So you have the tools, the methods, the means, and the opportunity to play the same game as the institutional traders who quite literally move the markets and create these movements. And all we're trying to do is jump on their shirt tails and make some money. Right. Let me pause there. See if there's any questions. James, yeah, crash, yeah, absolutely. So is there any questions on this, any comments, anything that you want to add to the mixing pot on this? But does everyone make sense? It's a very simple strategy. You've had it, but there's a few of those nuances that just make it work. And again, who was it? It was trying to remember, who's the guy that did the turtle traders? I can't remember his name now. Just there. I'm trying to remember a quote. I should really prepare a slide for it. The guy that did the turtle traders. You can go and Google them. I'm sure you'll find the name. But he had a similar methodology back in the early 80s, and I think the movie Trading Places was based off his. He placed an advert in like a magazine. He just wanted basically a group of traders. because he had a bet with another trader who said that traders were born, and the name completely slipped my mind. He said that traders can be taught, absolutely taught. You tell them the rules, and they can be taught. But he also said that he could print the rules itemized, just like I've quite literally just given you the back of the envelope version of my strategy. You can print the rules in the front page of the most popular magazine of the day, and no one would probably follow them, because there's a little bit more to trading than just knowing the rules. You've got to have the discipline and the consistency to apply those rules. And for a lot of people, that's the hard part. For example, out the goodness of my heart yesterday, the trader that I mentioned, I can't see if you're into that actually. I'm not seeing his name here, so I won't name him, shame him, but I was chatting to a trader. He was having a little bit of a difficult time. He reached out to me, and I hopped on a call because he was having a difficult time, and he was just like loss after loss after loss, and he basically, what essentially amounts to counter trend trading. The market or the stock, the thing that he was looking at was making, for example, a new 52-week high, and he would go short, thinking that he was selling resistance. And the reality is it was going wrong a lot of the time for him, or buying support and selling resistance. And it was just blowing through support and blowing through resistance. And he was on the wrong side of everything. And there was no strategy involved. So anyway, out the goodness of my heart, because he was having a difficult time, I decided to take on a charity case, and I sat down for an hour with him yesterday and give him a little bit of, talked him off the ledge essentially, and explained what, like, here's the system, here's the 3 rules for the trend, the 1 rule for the dip, here's the entry, there's your stop loss, there's your targets. Back of the envelope, 45 minutes later, Richard, thank you very much, Carl. Richard Dennis was the trader, but explained the rules to him. Literally, here's the rules. There you go. Have it with my love. Stop making stupid fucking trading decisions. Follow the process to keep the discipline. Stop with 1 chart, 1 time frame. Don't touch anything else until you've seen it work. The very next day, this morning, he sends me a message. What about, and he's back into it again. Should I trade this stock? What about this chart? What about this time frame? What about this market? Just follow the fucking plan that I laid out for you yesterday. That's all you've got to do. So immediately he wanted to change the system that I've shown to you. Here's the proof. Here's the rules. Here's the back test. Here's the forward test. Here's the proof. Here's the broker statements. It works. It ain't broken. Don't fix it. Just put the damn trade on. So not even 12 hours later, he's under the hood tinkering with a process that we know works. Like, all you've got, that's the hard part, is having the discipline and the consistency to put the next trade on. And it gets even harder when you hit a string of losses, because they will happen. Every strategy has a rough patch in trading. So you've got to be able to weather the rough patch. You're not going to capture the tops and bottoms of moves. Trend trading captures the big chunk in the middle. Oop, fills. That captures the big chunk in the middle. Let's go and look at what we just traded, actually. You just heard it dingly bong. I got away from myself. There we go. Let's take a look at, so one of the things that we've introduced in the last few weeks, I'm going to be adding this into the mixing pots. We've been talking about sentiments in the last few weeks. One of the things that I occasionally look at, I didn't realize TradeStation had it built in, but it does. Congratulations. Well done me. It took ages to find it, but nonetheless, this is the S&P. And this graph at the bottom here, this is the number of stocks that are above or below the 20-period moving average. And one of the things that we noticed a few weeks ago when we were talking about this, for anyone who wasn't here, it was about 4 weeks ago. And we did a bit of a deep dive on the number of S&P shares that are past the 20-day moving average. That's what it is right there. So all I've done is interlaid it with the regular S&P chart. I like looking at the futures. You can put it on SPY, you can put it on the cash index, but all it's showing me is the number of stocks that are at an extreme. So right here, we had 90% of stocks were above the 20-period moving average. Okay, and this may help me to give me a sentiment timing. So at this point, we were at the 200 period moving average. And one of the things that we spoke about on that illustrious day was this is the last chance for the bears to wrestle control. We've got a sentiment indication to say we're at an extreme. And the last time that it happens, we saw the market sell off. The previous time it happened, the market sold off. The previous time it happens, the market sold off. You go back, for a couple of years, again, if you just go back, look back through the last 2 years, 2 to 3 years, you can go back a little, it goes back longer. But it seems to be a regular occurrence that when we're at an extreme of movements, we've got this opportunity to say, well, the market is at an extreme. And this is what, again, we called this top here in real time on our open session. And I think we also called this here, we were having a great deal of difficulty being bullish. Firstly, because we're below the 200 period moving average. We've got to be that over under for the over the 200 to be even considering being bullish, but we're still under it. And we're at an extreme, whereas previously it's turned when we've reached these extreme, and it has done for a long, long time. Multiple years, we've got this cyclical indication to say, well, the probability of a downward movement, even a small one, is extremely high. Now, conversely, we can also say that when we're at the opposite extremes, we start to see rallies. We didn't quite get it there. We've got a small one there, it still rallies. Got one there. Again, we've got this thing here. It didn't quite perform in the same way, and then eventually it did. So it's not perfect indication as always, but the rally did ultimately happen from one extreme to the other. So we do have this high expectation that we could see a correct, well, in the context, because we're in a downtrend, a bearish trend, so this is still a rally in a downtrend. So one of the things that we were talking about last week when we started to spot this is we've got this overbearing, no pun intended, but this overbearing downward movement, an extreme market extreme, as Ham phrasing it. I don't believe that there's such thing as overbought or oversold. I don't believe it. It's a bullshit phrase. However, because we're looking at the number of issues in the S&P 500, we're 10% below. My apologies. 90% of the stocks are below the 20 period moving average. That's 450 stocks are on a downward swing. Yeah, absolutely, Randy. There's no such thing as overall, but there's 450 stocks on a downward swing. There's a good chance that there's going to be some profit taking along the way. And we've got historical precedent to say that that's probably the case. So it's not a traditional oscillator in that sense, but it does seem to be a good leading indication that the market could rest, it could pause, and possibly even rally. So then we can start to say, well, if we're expecting there to be a rally, can we go and look for some opportunities on some different timeframes? So if we've got this bearish bias in the markets and we're thinking there's going to be a bullish rally, could I take some profits so that I don't have to sit through a retracement? Could I start thinking about hedging? So if I'm overly bearish in my portfolio, which I am, I've freely admitted that, I've had very few bullish opportunities set up on the daily charts, but now I've got this timing indicator to say, you know what, now's a good time to be aggressive if there's an opportunity on the 60-minute charts, and go and look for opportunities. Or if I just want to be not necessarily passive, but just protective, I can certainly take some profits, tidy the portfolio, nip the underperformers, and possibly think about hedging if I want to, if that's part of your strategy. Or in my case, go and find some aggressive opportunities on the 60-minute charts to find an opportunity. So that's exactly what we're going to do right now. So let's take a look at the trade. So one of the things, and again, I posted this on the social medias. Awesome. Lucia, so hopefully I'm pronouncing your name right. I apologize for my ignorance if I'm not. Yes, it is being recorded. It's being live streamed. As soon as you've finished watching it live, you can go and watch the recording immediately on YouTube. So one of the things that's, let me just do that. There we go. Perfect. One of the things that we were looking at, and we have been looking at, is, again, this is the 60-minute chart of the S&P. Let me just put my, let's do this. There we go, there's the watermark. I always get told off for not having the watermark. I don't like having the watermark on, which is why I don't like it, but I appreciate that doesn't help with the recording. But nonetheless, so we're looking at the S&P futures. So now what we're doing is we're thinking about, okay, well, if there's going to be an upswing in the markets, and again, bear in mind the 60-minute charts, and we were thinking that somewhere around there, we're going to be bullish. Now, we've got, and quick sidebar, we've got a strategy that we officially rolled out 3 weeks ago now for the main move of the day on S&P futures. And again, the 12-year performance, similar strategy, one trade a day. There's a few nuances with this because it is a day trade strategy. But at a very specific time, we're looking for a trade. So we can look for trade opportunities. Just to demonstrate that we've got a strategy, it works on 60-minute charts. So that's what these little algorithmic snippets are showing us. There we go. So we've got some profits to be made there. Anyway, so the first clue is that there's the 200, there's the 50. So we're thinking there's going to be a bullish swing from the daily chart. The sentiment is one of the things that we're talking about. Now, here's the great thing. So if we're looking to sell rallies in a downtrend on this time frame and on the dailies, because they're in alignment at the moment, but the sentiment that we just looked at was suggesting bullish. Well, the lower time frames are going to start moving upward first. So there's no bearish setup. So there's the 50, there's the 200. So price is not below the moving averages for us to participate in the trending part of the downward movement. So we're not in any fear of being on the wrong side of the bullish sentiment that we've just identified, because at this point, which was I can't remember what day it was yesterday, we had this huge, 2 days ago, this huge rally in the markets. So there's no bearish trade setting up. Even if we wanted to, there's no opportunity. So this is what rules do. We can have this sentiment bullish viewpoints, and the 60-minute S&P strategy is not giving us a bearish entry. And we looked for it, it just wasn't there. There's no entry setup because it spent all of its time above the 50, then it went up to the 200, and now we can start thinking for other opportunities. Again, the point I'm trying to get to is we can have that sentiment, the bullish sentiment, and it's not necessarily in conflict with the 60-minute chart. So we've got this bearish direction bias on the 60-minute chart, but there's no bearish trade setting up. So you can have those viewpoints that on the face of it might be in conflict with each other. And the reality is the 60-minute strategy is going to be temporarily neutral. It's not giving you an entry setup, so you don't have to worry about it. And if the sentiment wasn't ready to be bullish, then we would have got a bearish setup, which is what we had all week. So all week we've had this bullish sentiment, but the bearish moves have been bearing. We've been profiting in small ways on the downside with the same strategy, even with a bullish daily sentiment. It just wasn't ready to kick in. And then when it does kick in, and the bullish sentiment eventually goes bullish, you're not going to have any more bearish setups. So don't worry about being on the wrong side is all I'm trying to get to. You've got to trade the setups, regardless of viewpoint sentiments or opinions, when they set up. Right, I think we've labeled that point. Let me just go back out. So we've got this bullish sentiment on the daily charts. And what I can do is I can start saying things like, okay, well, is there a more aggressive opportunity to profit from that bullish directional bias that we were just talking about? Well, at its most basic, there's the 200. At its most basic, when price is above the 200, I want to be bullish. When it's below the 200, I want to be bearish. Now, ideally, I want to wait for the crossover in the average prices as well. But because it's only a small move, I'm going to go a little bit off piste here. I call this a phase one trend. So I can use just it being above or below the 200 to look for trades. Then I can also tie in the fact that, well, we've got multiple crosses in the average price here. And that's my usual indication to say, you know what, maybe I shouldn't focus so much on a trending strategy because we've got multiple crosses. The only way for that to happen is if price is in a consolidation. Okay, cool. So we've got an indication, a mechanical clue that we're going to see a bullish shift in direction. And now we've got a clue to say, you know what, maybe the market's not trending for those. We've got multiple crosses in the average price. Maybe I should just turn off the trending strategy. Let me just turn off the moving averages to tidy it up. Maybe just turn off the moving averages. I've left there's the 200 because we're still going to use our over under there. but we know that price is consolidating. And we've got two choices. So they've got a dotted line and a solid line. I initially drew the solid line as my channel, my consolidation zone. And then with a little bit of reflection, I saw a second possibility. So one of the things that I'm just pointing out here is that there's no single right or wrong answer when it comes to trend lines. I like to think about scenarios, and the ultimate qualifier for me is, are we above or below the 200? So the trend line doesn't really matter until I'm above the 200 period moving average. At that point, I'm going to start calling this a breakout. So I've got a consolidation, cracking. I don't really care where the boundaries are because it's of no consequence until I'm above the 200. So really, the 200 period moving average was my indication. So, okay, well, now I'm going to be bullish. This is what I call a phase one trend. And we've got a breakout wherever the boundary high is. Don't worry about where it is. It's a sloping trend line. Trend lines are dynamic. But when price is above the 200, I've got to presume to be bullish. So there's your breakout. There's your pullback. Entry above the pullback high. Usual rules for breakouts. And where could this get to? Well, let's take the height of the consolidation, add it to the approximate breakout points, and that gives me a projected move of about 4,100. And we're halfway there overnight. There we go. So we've got a bullet. So coming back to the point, let's construct a trade. We've got a bullish sentiment bias. Bear with me. Well, there we go. So we've got a bullish sentiment bias. Why? Why have we got a bullish sentiment? Oops, a daisy. Why have we got a bullish sentiment bias? Sorry, bear with me. Pressing all the wrong buttons here. Why have we got a bullish sentiment bias? Because we had this extreme reading last week to say, you know what? We could be looking at a directional shift in the markets. Great. How do we profit from that? Well, I can go and look for a lower time frame entry on, in this case, the 60-minute chart. Great. That's what we've just done. We found a consolidation. We used our broad base over under 200 period moving average and say, okay, well, when it's above there, it's definitely going to be a breakout because there was a little bit of ambiguity over where the boundary highs were. There was no, we could have drawn the consolidation two different ways. And again, there's no single right answer. Again, just with the benefit of hindsight, I think what I can do is get rid of the black lines. There we go, the solid black. So I'll leave the these ones on here. So I think that's, again, with the benefit of hindsight, that looks like the right choice. It doesn't make any difference. We're not in, no one's disagreeing that it was consolidating. We had multiple crossing the average price. There is a consolidation. The only thing that I'm fussing over is, well, where was the boundaries? Well, let's not worry about where the boundaries are right this second, because I'm not going to do anything until price is above the 200 period moving average. Great. So that's what we did. So price is above the 200 period moving average. Standard rules, trade the first pullback after the breakouts. Ding dong, we're on. Height of the consolidation, add it to the breakout points. Don't worry about the specifics, about 4,100. If it gets most of the way there, if it got there, if it gets 80% of the way there today, guess what I'm going to do? I am not going to hold my breath all through the weekend and see if it gets the extra 10 points by Monday. If it gets most of the way there by the end of today, I think I'm just going to take it and not worry about the extra juice for the squeeze. A little bit of common sense here, folks. It'll probably get there by today. It's only an average day's move away. But this is how we can construct a mechanical approach to trading around a hypothesis that we think is going to be a bullish swing. The sentiment change is what we identified, and we've had 10 days worth of lead time. If you follow me on email, if you're in the Slack group, if you follow me on LinkedIn, I post about this in public. I don't charge for my newsletter anymore. I stopped charging for that many, many years ago. So you can kind of see what we're doing. I generally post what I'm doing in real time with no benefit of hindsight. And this is what you've got right now. So we constructed a good hypothesis that there's going to be a bullish shift. And then we can start hunting for an opportunity. Well, great, I'm going to trade the S&P strategy on the 60-minute charts, and I'm going to look for a bullish setup. Consolidation, we're above the 200, trade the breakout, first pullback in, and there's multiple pullbacks along the way. Multiple pullbacks along the way. All good. And now it's just a case of trade on, wait for, which it is, wait for the charts to get there. Right. Everyone happy with how you can take a mechanical set of rules and then layer it onto a sentiment shift. And again, it's not necessarily discretionary. This is still mechanical. Guess what? Guess what we're going to be probably doing next week when price is at this point. So when we get here, 4,100, hopefully we'll be looking at an extreme of movement in the market. Maybe there'll be 80 to 90% of stocks above the 20-period moving average, in which case, guess what we're going to be doing? We're going to be looking for an aggressive bearish position. Ta-da! It's almost like we knew it was going to happen well in advance. Now, to be fair, folks, is this complex? Could you, if I, God forbid, but if I was to drop dead tomorrow and just disappear off the face of this earth, release myself from this mortal coil, could you do this on your own without me? Could you? I would hope that you would. It's not complicated, is all I'm trying to say. It's not complex. Absolutely right. Perfect. I love it. Thank you for the vote of confidence. I can't quite decide if it's absolutely that you could do it or your confidence that I'm going to drop dead tomorrow. Oh, that's a bit morbid. Let's take a look at what you heard Bingly Bong in the background is NOC, Northrop Grumman. I put an order in just before the markets because I was doing a session. I have a tendency to occasionally miss a few trades when they're presenting themselves. I was trying to get something on yesterday with this and it just didn't fill. I had more of a complex trade on and there was no open interest, which was frustrating. But yeah, I was trying to construct a ridiculous strategy. So I've just gone for my usual stock replacement strategy. We're back above the range high, we're at it. Standard stuff, there's the same thing, more of a horizontal range, high to the range, added to the breakouts. We're above the 200-period moving average. I'm biased bullish. High to the range, added to breakout. So we're looking for a move up to $540. The current price is $490, which is where you heard me get filled. So another good $50 move. This is a higher priced stock. I've done a single. You could also do debit spreads. So if it's out of your price range, you can do a debit spread. If you want to trade it with an income strategy, do a credit spread, do a put credit spread. Again, it's not my flavor these days, but it is a choice if you want to. As these are higher priced options, you could do a synthetic naked premium play. So if you wanted to do something like a broken wing butterfly with a deep broken wing, it will create a synthetic naked short. If you want to have more of an income play, I might do that later. That's what I was trying to get filled on. There was just not enough liquidity to get the position size that I want. It was just zero open interest, which was quite frustrating at the price points and the strikes that I wanted. But it is a possibility. You can construct a strategy for anything that you want. So they're all going to have a bullish flavor, because it's a bullish breakout, unsurprisingly. But anyway, that's what just fired off in the background for me. Right, I've been a yipping and a yapping. Everyone happy with that? How did I get 540 stop? 540 targets, what I think you meant, Jim. I did run past that, didn't I, quite quickly. Let me just do it one more time. Right, before I do. Consolidation. We've got 1, 2, 3, 4 crosses. The 20 goes above and below the 50 once, twice, 3, 4 times. Can you see it? Can everyone see that for that matter? We've got at least 3 crosses in the 20 and the 50 period moving average. Cool. The only way for that to happen is if price is oscillating, aka a consolidation. So that's the mechanical rule that says, you know what, Phil, stop trading the trend because there is a consolidation. We just looked at the same thing on the 60-minute futures for our bullish trade that set up in the week. So now you know that the average prices have crossed 3 times. You and I can agree that price is in a consolidation. That is a statement of fact. Because and I'm being a little bit of a jerk by emphasizing certain words. It has happened. No one's in any dispute over whether it has happened. It's not an opinion, it's a fact. It has happened. So great. So now we're in agreement on this part of the charts, price is consolidating. So rather than worry about, well, is it a channel? Is it this? I'm not worried about the name of the consolidation. All I want to know is it consolidating? So all I've done is I've drawn a box around the area that is in a consolidation. Now, don't worry about the specifics. Now, with time and practice, you'll get better at it, but just recognize that there is a consolidation. So that's what I've done. The price, the highest high, you've got multiple touches right there. We've got multiple touches of the low right there. I just contains them all. So what I'm going to do is I'm going to take the height of that consolidation. Don't worry about the specifics, the pennies. The high is about 490. The low, I'm just going to eyeball it. It's about 410. It's going to be an $80 target. The height of the, going to add that to the high. And that's what that number is. Does that make sense? So that's consolidations. Preempting the next question. What about a trend? What about if there's no consolidation film? Let's press the easy button. Let's get the, I've not picked the best chart to look back on. Let me just zoom out. Oh, this is not the best looking chart, is it? Let's do SQM. SQM's going nicely. SQM. Okay, so SQM. The other way of doing it. So what if there's no consolidation? I've just picked another chart. So what we can do? Okay, so the algo's got me into a trade here. That's what these blue lines are. So it says if you're not in a trade field, get in a trade. So if I want to know what's the potential for this move? Like I've got rules for it. The algo sorts it out for me. But if you're doing this manually, like what did it do last time? Well, the last move was from there to there. And if you want to break down the smaller moves, it did that. So it looks like, so that's about $10. That's about $10. That's about $10. The big move, well, it's got to be about $30. Great. So this move to that move, it did it all in one move right there. So what's that? Again, just looking at the scale, again, from 70, 80, 90. So we got to 30. So it did about $40. So it looks like the big swings are between $30 and $40. Once, twice, will 3 times be a lady? I'm an idiot, I'm sorry. So somewhere between $30 and $40 for the big moves, big swings, and the little ones, it looks like it goes in $10 increments. Which target do you want to pick? If you want to get paid, it looks like if you want to get paid at the end of the week, look for the $10 targets. If you want to get paid at the end of the month, look for a $30 target. So so we're going to go from, let's call it $100. Let's make the math simple because public math is awful sometimes. $100 add 30 is 130. So that target has the potential, assuming that it did what it did last time and the time before, got the potential to move $30. Cool. Don't have to complicate this. What did it do last time? Well, it's done $30 moves a few times this year, this last 12 months. Great. It'll probably do $30 again. It's got the potential to do $30. Now, it might do more, it might do less, but it's got the potential. So if we got a trade on at $100, we're halfway there. Oh, we're halfway there. Bit of Bon Jovi along the way. Got another $15 to go. Does that make sense? Like we don't have to make this trading thing complex. I used to do, like, I've got to look at the exact penny movement and it's got to do this and it's $27.49 is the top. Fuck it, it doesn't matter. It's about $30. And when we're 80% of the way there, take your profit. Don't worry about it. It's Friday. You know, if you're 80% of the way there on a Friday, enjoy your weekend and take some profit and don't stress about will it get there all the way by Monday. Anyway, we've ran over a little bit. We've got one more thing to talk about, folks. One more thing. There we go. So we've nerded on the charts. We've chased some squirrels. In the last few minutes, let's open the phone lines. Let's open the phone lines. Hello, caller. You are caller number 27 in the queue. You are important to us. Just raise your hand if you would like to hop on a call. If you've got a view on the news, if you've got a question you want to ask, if you've got some feedback a takeaway that you want to share, if you just want to say, Phil, you're an idiot, I'm okay with it. I've come to terms with my silliness. But if you want to have a little chat, we'll finish off the day with a little bit of a chin wag about the markets, and we'll take it from there. I'll just click allow to talk, and then it's over to you. So it's your chance to make the community better. Do you have a viewpoint? Do you agree with me? Do you disagree with me? I don't care one way or the other. I'm happy with my opinion. But if you've got a view on the news, if you want to know about non-farm payrolls, if you want to know about the media, let me know now, and I'll just let the Glenn, you can't let me down. This was all your idea. If you don't want to talk to that, that's fine. It's over to you. Awesome. I appreciate we've gone a little bit over, so maybe no one's interested. That's fine. We're going to try and make this a regular slot. So if you do want to hop on the phone line, we can do, and we'll take it from there. Again, I'm guessing that you either can't or don't feel like it. Again, Glenn's not in the mood today. Fine. I won't be offended at all, even though it was your idea last week, Glenn. But nonetheless, my views on the news, just to wrap that up, I have no view on the news. Again, I get asked very regularly about what's my view on non-farm payrolls, what's my view on this thing, the Fed, well, the reality is I don't have a viewpoint. I go intentionally out of my way to not look at the news. And just in case you don't believe me, I've got the proof to say I don't need to look at the news, because if I just put the trade on when trade sets up and trade with the frequency that the trade sets up, then I should be able to emulate this performance. And no news is taken into consideration. I'm not looking at the Fed. I'm not looking at what Powell's saying. I'm not looking at who's tweeting what. It's of no consequence to the results, because the results clearly speak for themselves. So again, if you've got a view on the news, again, I don't really have one, but if you appreciate that, you may have one in the future. So if you've got one and you want to talk about it next week, if something exciting is going on, or if you've got a question, then obviously you can share it with the group at your leisure. Right, as soon as no one wants to hop on the phone line, maybe you can chat it. What was your, or type it rather, what was your biggest takeaway today? I think, look, judging from the comments along the way, everyone's got something out of it. It was an interesting session, and we dissected a trade that's set up in the week. We've been talking about the last few weeks, but it's just interesting to watch these things unfold in real time, with no benefit of hindsight, which is always the nicest way to do anything. Maybe some of you saw a little bit of a scary inside look into the crazy way that my mind works. Awesome. Thank you very much for your feedback, James. James is just saying that it was an interesting session. Glad that you got something out of it. There we go. Cheers, James. Yes, there will be a recording, Lucia. Keep them squirrels coming. Awesome, awesome, awesome. I think everyone's all typed out or chatting out. I'm talking to myself today, folks. Oh well, never the mind, never the mind. I'm glad you enjoyed it. Thanks for all the thumbs up. There's the emojis galore. We've got a nice full house as well today. We've got a good 20-30 people in today at various points. So just looking down the old names, we've got Adrian, Brett, Chris, Colin, Demlu. Obviously, you're new to that. I think you're new. We've got ES, Zeke, hello, Jeffrey. Have I not seen you? Are you new, Jeffrey? Or we? I think I recognise your name previously. So Lucia, Perry, Randy, Ray, Rodrigo, Tate, hello, Vito, and Vladimir. I think you're new to the session. I don't recognise your name, but great to have you all here. So just one thing left for me to do, and that is just to start the session saying thank you for spending some time with me, and just want to show some appreciation. I don't take it for granted that we could all be doing other things with our time. I could certainly be doing other things with my time. I enjoy doing these sessions. I try and always give back to the community at large. For all the reasons that I mentioned earlier, like I generally did not have anyone to ask when I first started out. So I try in some small way, just try and nudge you along the path, the journey, so that you can avoid the pitfalls that I made, and just speed up your development as a trader. If you do want to work more formally with me, you can do. just reach out to me. We can have a chat again. I appreciate that not everything I do is right for everyone. At the very least, I'll always point you off in the right direction, whether we're working formally or informally together. But just to finish off with a little bit of gratitude and say thank you from the bottom of my heart for deciding to spend some time with me today. Time is the most precious thing that you can give anyone, so thank you very much. My only wish, as always, is that the information that you've got today, just put it into action, just do it. Put it into action, take action, share it with someone who needs to hear it. And if you are watching this on the replay, pop a comment in the YouTube. Feel free to share this with someone who may need to hear this message, but ultimately just take action. There's that old adage, isn't there, of what's the phrase? It's trying to remember it. Squirrels chasing squirrels time. Yeah, best time to plant a tree, wasn't it? Best time to plant a tree was 20 years ago. The second best time to do it today. So when was the best time to learn how to trade, to start trading? 20 years ago. That's surprisingly, that's when I did. The next best time is now. Waiting for confirmation, waiting for the Fed, waiting for some announcement. There's always some bullshit reason to wait. And the reality is we've proven we don't need to look at the news. We don't need to wait for something, some form of confirmation. When you have a completely rule-based trading system, the only thing that you're waiting for is the conditions to be met to place the trade. And it took me a long time to get here, 28 years, almost 29 now. But we are right here where we can quite literally put the trade on when we see the trade. Again, just going back to the original slide, I want to go from where's the trade to there's the trade. So you've got all the same tools and methodologies that I use, but that's what we want to do. We want to be able to just log in, check the trade, there's the trade, and check out. And then we can be about our business and go and do something else. Right, I think I've labored that point. Ray, thank you very much. Ray's just passing a comment there. So it's discipline and consistency is the big takeaway. Thank you very much. Yeah, it's not easy. I mean, the reason, just picking up on your point, Ray, the reason why I have all these rules is because like discipline and consistency was a big thing for me. Like I struggled. I really did struggle early on. But like, how do we get the consistency? Well, instead of wondering what to do, why don't we create a rule that tells us what to do? So that's why I've gone down this road. It's because of that discipline and consistency in my own trading that I have these rules for myself. So it's an interesting point, and just wanted to piggyback on your comments. Like the rules are the way that they are because I have that problem as well. And now I, guess what, don't have that problem. So just do it. Right, with that said, folks, let us charge the Tesla. Let's land the plane, let's dock the boats. Ultimately, back to the 80s, game over. If you've got any questions, comments, observations, shoot me a message. You can hit reply on any emails that you get from me. They do come directly to me. If you want to connect on LinkedIn, there's a link in again, most of the emails that you get from me. I'm pretty active on LinkedIn, so if you want to follow me there, I do send a daily email, and you can reach out to me wherever you feel comfortable doing. I don't tweet, so don't ask me to. I can't stand the platform. But nonetheless, that's where I'm at. I am also reasonably active on Slack. That is where my member community is. There is a free and member area. But ultimately, if you want to get to me there, you can do with any follow-up questions. With that said, let's do it. Let's end scene and fade to black. Make sure that you have a wonderful weekend. I'm certainly planning on partying like it's 1999. Hopefully you do too. Make sure your weekend involves ice cream somewhere along the way. Right, let's do it. I'm going to stop the live streaming. Goodbye, YouTube. See you all at the same time